Good day, everyone. Welcome once again to my YouTube channel. My apologies, I've not been online to be able to post videos in the past 3 weeks now. I sincerely apologize for that. But now we are back and we are better. Today's video, I want to be sharing with you how you can use fair value caps alongside CRT and MSNR to get good trades, right? So over here, as you can see on the screen, is a 10-hour trade on BTC, and I actually executed this trade. I also shared it live with my on my Telegram community and my VIP signals. Although our initial profit take profit was over here, which was the TP1, right? So if I should show you guys on the channel, this was what we had, right? So this was the trade here, and we eventually hit CP. This was when the trade was still running. Then this was where we had our big profit hit for R. It was actually about 4.5 hours, but then I told them to take partials at some point, took partials, and we held the rest to full TP, and that's how we got about a 4-hour trade on BTC USD. So I'm going to do a trade breakdown on how we're able to come about this wonderful trade over here, and the full TP would have been a TP2, which was this target, right? So just stick around so that you can learn and know how we're able to come about this trade, buyers, and everything, right? So first things first, we always want to come from the higher time frame, right? We want to know what's going on the higher time frame. So I'm just going to delete all this right now because we're going to be drawing it together, right? So if I should go to the 1 week time frame, which is the higher time frame, in the higher time frame, I'm going to be seeing that we have this fair value gap over here. Previously done a trade breakdown on Bitcoin. Bitcoin has been bullish for some time. You can see over here, I think it's on the monthly time frame, right? Oh, it's going to be on the 3 months time frame. Oh, over here, let's go to 3 months. So you see that. So on the 3-month time frame, you can see how price mitigated this fair value gap over here, taking out the low of this particular bearish candle. This particular bearish candle, price liquidated the low, filled into this fair value gap, and gave us a push to the upside. So I'm pretty bullish on Bitcoin, right? Then over here, we got Bitcoin liquidated this particular candle, which was like this candle and this candle. We're going to call it our CRT candle because we're going to be putting them together since they are candles of the same color side by side each other, right? So price has liquidated CRT high. Next thing we're expecting for is to price to liquidate the CRT low, mitigate this particular 3-month key level. Then we can see further buys on BTC. So anticipation of BTC is further sells, right? So on the monthly time frame, on the weekly rather, it was clear. On the weekly time frame, it was clear what BTC was up to. And so over here, you can see that there was a fair value gap over here because we were trending downwards on Bitcoin, and that fair value gap had a CRT candle, which is this particular bearish candle over here, here being the CRT high, and this TP2 being the CRT low. So obviously, you can see that the CRT high had been liquidated, right? One of the rules of using the CRT and key levels, because in this scenario, the fair value gap is going to be a key level. I had a live stream. I normally have a live stream with my students in my Telegram community rather every Saturday by 8 p.m. Right. So yesterday, which was Saturday, right, we had a live stream on Telegram. We'll just share with you guys what we did. So this was a live stream that we had, and I shared with them my rules for execution. So this is my criteria for execution whenever I want to execute a trade, right? So you can see over here, structure is the first thing. Second thing is CRT high or low liquidation and closure below or above the CRT candles, as the case may be, for buyers or for sellers. Then liquidation must lead to mitigation of a higher time frame key level. Now this higher time frame key level, one of them is what? The fair value gap, and this is what we're going to be doing today. And some other scenarios of subsequent videos, we'll be talking about the open growth key levels, A-shape, V-shape key levels, inverted A-shape, V-shape key levels, and so on and so forth. And so for today, we're going to be talking about the fair value gaps as a key level, right? So I said CRT high or low liquidation. So since we were selling, it was a CRT high liquidation, 1, then a closure below the CRT candle, 2, then the liquidation must lead to a mitigation of a higher time frame key level, 3, which is the liquidation leading to the mitigation of the fair value gap, because this is the fair value gap scenario that we're going to be using in this video. Okay, so quickly we're going to go back to our charts. You can see this was the CRT high liquidation. This was the mitigation of the fair value gap. And we got the closure below the CRT candle, right? So that's all we wanted to see. And now once you get that closure, you go down to the lower time frame to do what? To get your confirmation entry. Let's go back to the criteria so you can see how I frame my confirmation entries. Okay. So over here you can see the lower time frame confirmation entries after the mitigation, liquidation, and closure below because you're selling. So closure below this candle. Now this confirmation entry includes OB entry, which is the A shape or V shape key levels, and QMR entry, which is failed A shape or failed V shape key level in the same direction of price. And the breaker block entry is failed A shape or V shape key level in the opposite direction of price. So for the purpose of video, the confirmation entry that was spotted was the second one, the QMR entry, which is a failed A-shape or V-shape key level in the same direction of price, right? So, and there must be a valid liquidity before your entry, either of these ones, the structural, the inducement, or the engineered liquidity. One of them must be present before your entry, before you take that particular setup, right? Then the entry must have swept liquidity. The entry, so-called entry, must have swept liquidity, which is for sure. Then your take profit will be at the CRT high or low, which is the internal CRT high or low or before the external, right? I'm going to show you all that on the chart. Then final two is discipline test of only setups that meet these criteria. So only setups that meet these criteria are the setups that I am willing to execute. Then patience to wait for setups that meet these criteria. And so I just want to go straight back to the PTC chart so that you can see all these things I have listed for yourself. So one thing about the checklist is it helps guide you and your, you know, it helps guide you to be more, what's the word? It helps guide you to be more disciplined with your decision making. Right. So first things first, we saw our higher time frame key level, which is this fair value gap. Check. We saw our CRT high, which is this particular high of this bearish candle. Check. It has been liquidated. Check. We got a closure below the CRT candle. Check. What then do we do? We drop down to the lower time frame to get our lower time frame confirmation entry. Right. So for this, I'm going to be going to the daily to see if there's something we can work with. Let's go over to the daily. So on the daily time frame, as you can see, we got this liquidation of this high, then we got this pushback to the downside, and we got a very good shift in market structure over here because this was the previous break of structure to the upside. Mark that out. Then we got a break of structure to the downside over here. I usually used to back them from the bodies of the candles, right? So once we got a break of structure to the downside, what did I now see next? Right? On the daily time frame, I can spot another higher time frame key level, right? The higher time frame key level is this. So as you can see, after we had this shift on market structure break to the downside, we observe this fair value gap, immediate fair value gap over here. So we're just going to mark that out, name it fair value gap, right? And now you can see a similar scenario with what we saw on the weekly time frame, the where we saw the weekly fair value gap and saw the daily CRT candle. So same things are occurring here. This particular bullish candle is going to be acting as the daily CRT candle, where this is the CRT high over here. I'm going to just name that the liquidity because price obviously liquidated the CRT high. Then we had here as our CRT low, which is going to be the TP1. So that's where we want to take our first profit at, right? So that's going to be the TP1. So I'll just mark it out. So that's the CRT low. Right. So basically what we want to see is after price had liquidated CRT high, but gone down to the 4-hour time frame or one. Let's go to the 2 hours time frame. After price had liquidated CRT high and mitigated the fair value gap, it is a higher time frame POI over here. So this was let me just refine this. So it's supposed to be okay. Then we had this. Good. Then we had this. Good. So we had a break of structure to the downside, right? I initially expected price to give us a little pullback an entry before we take out the CRT low, but then we were not opportune to get that entry. We were not opportune to get that entry. So we got a break of structure, then we looked for another entry around the highs. Then our new low was going to be this low over here. This is where our take profit was going to be, which was the TP1 I labeled in the first diagram that I showed you guys when we started the video. Okay, so that's going to be our low target. We're just going to be naming it TP1. See? TP1. Okay. Oh, sorry about that. TP1. Okay. All right, so that's our take profit for this. Now, how do we frame our entries? If you go back, let's go back, because this is going to be the reference point. So to get back to the criteria for execution, the confirmation entries are one of these entry models. The OB entry, which is an A shape or V shape level entry, right? So the A shape is for sells, while the V shape is for buys, right? Then a failed A shape or V shape level entry in the same direction of price. Right? So it means if there was a A-shaped level entry that failed and continued in the direction of price, then that's what we're going to be working with. And the deal breaker block entry, failed A-shape or V-shape entry in the opposite, level of price and all that. So for this BTC chart, we're going to be making use of the QMR entry, failed A-shape key level, this scenario, right? So we're going to be going straight back to the chart so you can see how it came about the failed A-shape key level entry. So this was it over here. Over here we had this before price goes over here. We have this break of structure, the downside over here. We have this break of structure to the downside over here. Now I'm going to combine this with something else, right? In my previous video on my YouTube, you can check. I made a video on talking about why other block fails. And why other block will fail is if one reason of which I made the video was if there was an unmitigated POI right above your other block or right below your other block. So in this scenario, there's an unmitigated POI right above my other block, right? So if I was to follow the structure, we have this over here as a V-shaped reversal over here, right? It's a V-shaped reversal because price gave us a push up to the upside and gave us a break of structure to the downside. Over here is a break of structure, a very clear break of structure. So price ideally was supposed to react from the V-shaped level, then sell down to the downside. But it failed. Why? Because there was a fair value gap right above this V-shaped level, right? But immediately it swept the fair value gap. We saw that sell straight down to the downside. Right, so I'll just go to the 4-hour time frame for more clarity. Okay. So on the 4-hour time frame, this was going to be the V-shaped level over here, this particular high, right? So we got this V shape, then it pushed down. The price simply came up to liquidate the V-shaped level, then it went down and gave us a further break of structure to the downside, right? So now that we have seen a further break of structure to the downside, it's a confirmation that good, we are good to sell, right? Then that V-shaped key level or failed V-shaped key level is going to be acting as our QMR, right? So I'm just going to name, since we're on the 4-hour time frame, it's going to be our 4-hour resistance, which is our 4-hour key level, right? Then our liquidity is going to be this immediate pullback after the closure within the V shape. That is push down, then push up. So that pullback is going to be our liquidity, right? So just going to mark it as our liquidity because part of our criteria is we always want to make sure there is a liquidity to take before tags into our entry. Then this is our invalidation level. Price going above this high, we are no longer interested in the sales, right? So I'm going to use a red line to indicate that. Good. So this was exactly how I was able to come about my entry on Bitcoin. Okay. So what I did simply was I put my shorts here, put my stop loss right below, right above the invalidation level, which is this red line over here. Then my take profit was at this low, right? So to concise this a bit, it gave us about 4.5 breaks to low and just easy peasy. The trade was, formed. Now this low was current low, the most recent low, which is ideally where your take profit should be. But if we were to go back to our weekly time frame, we know that our weekly CRT candle low has not yet been liquidated, which is this TP2, right? So I should go back to the 4-hour time frame and now see reasons why I could possibly extend my take profit to the TP2, which is this over here. Okay, so I can extend my profit over here because I know that that is a weekly weekly CRT count. Now, if we head back to the criteria for execution and everything, if you can remember, I said we always want to target the internal CRT before the external. See, TP at internal CRT high or low before external CRT high or low, as the case may be. And we also put our TP at higher time frame key levels or roadblocks. So that was why our TP1 was at the internal CRT low, then our external CRT low becomes our what? TP2. So basically, in this scenario, if you are interested in holding your trades all the way to the external CRT low, basically what you do is you place this trade in two places, right? So if you wanted to risk $100 on a trade, you can execute $100 on a trade You can execute $50 on the first trade, put your take profit at the TP1, then you can put your second take profit at TP2, risking the second $50 on the trade. So when price gets here, the one position is closed, and the second position runs all the way to TP2. That's basically what trade management is all about, right? You don't want to be greedy, you just want to make money. Okay, so that's basically how this trade was, being come about, using fair value gaps, using CRT. See, you saw the fair value gap, saw the CRT high and low, and using our entry models, right? So I'm going to be breaking down this because there are several entry models. This is one of them. We have our order block entry, we have our breaker block entry. Basically, I just use this trade, the order block entry, the breaker block entry, and the QMR entry, right? But now it's not in SMC terms, it's now in the MSR trend, right? So it's kind of a little bit different, but it's still the same logic if you actually understand. It's still very, very much the same logic. So that will be all for now. I hope you've been able to learn something from this video. If this video was of value to you, please do well to drop us a like, subscribe to the channel, and turn on post notifications so you get notified whenever we drop helpful videos like this on YouTube. And please again, I need you in the comments. You commenting that this video helps YouTube to know that this content is of value to you guys, and it helps YouTube push the content to more audience and more reach, right? So that'll be all for now. See you guys on the next video. I wish you all a happy new month and a profitable February in 2026. Peace. It's only one principle here.